How's it going, everybody? It's your boy KCG Trades, and for this weekly watch list video, I'll be switching it up a bit due to the overall market conditions. As per IBD, we are still in a confirmed uptrend, however, it is under pressure. So this, in my opinion, isn't the best time to be taking new trades. However, this is the best time to do your homework and find stocks showing the best relative strength to potentially lead the next wave upwards. So in this video, essentially we'll be going through the overall market, how I'm seeing things, as well as stocks that I'm watching. So when the overall market does turn up again, I know exactly what stocks to focus on. All right, so I'll be doing the homework for you guys. I'll be doing the homework for myself. And right before we get into it, if you guys can just stop what you're doing and smash that like button, hit that subscribe button. And at the end of the video, if you could comment, I'd really appreciate it. It does help with the YouTube algorithm and my reach out to the YouTube community. So I'd really be appreciative if you guys could help me out there. But besides that, let's get right into it and start with the NASDAQ QQQ. All right, so if we take a look at the QQQ, the NASDAQ, we are under pressure here on strong volume. We actually closed below the 50-day moving average. And on the weekly chart, we are below the 10-week moving average. So these are definitely signs of caution. It's not a tape where we want to be aggressive and taking a look at the overall market. It's possible we could get further downside. Strong volume to the downside. We don't know. We don't have a sign yet of any reversals. So we definitely want to be cautious here. If we take a look at the SPY, it closed right on top of the 50-day. It did undercut it, closed a little bit above it, but look at the volume, very strong downside volume. So that these, like I said, signs of caution. And in regards to the overall market, I do look at other things. So what I look at is the VIX, and if we see here, the volatility is getting pretty high. We are in the 27 ranges, and the best time to be aggressive is under this 24 level to 20 level. Around this box area is the time to be aggressive. So currently, this is not the time to be aggressive. It's a time to just relax, let the market come to you, let the market correct, and wait for your opportunities. Another two things I look at is an oversold and overbought conditions, which is the NYMO and the NAMO. So if we look at the NYMO on the weekly, it shows negative 55. So it does say that under negative 60, it is supremely oversold, and above 60 is supremely overbought. So right now it's at the negative 55. So we are approaching super oversold levels on the NYMO, which is the New York Stock Exchange. And the NAMO is the NASDAQ. It is actually negative 70. So this is very oversold, and it hasn't been this low since the March lows of the COVID crash. So honestly, there is potential that we could get a strong bounce. The VIX could come back down here. The QQQ could just bounce, go above here. The SPY could bounce as well. And the SPY could bounce from the 50-day as well. So although we are in a little correction phase right now, volume is really high, we can't take out the possibility of a strong bounce from here. The government just announced their new stimulus bill and stimulus checks to everyone. So people will be spending their money, and we are, like I said, we're in a confirmed uptrend still. So it is very possible we could just go back up and possibly bounce from here and retest new highs, or we could do some consolidation, which would be healthy. If we see here from the September to end of November, we were strictly going sideways. Down, up, just went sideways until we finally broke out. So we could possibly be in for that type of environment again. But as of now, we just have to wait and see. We don't want to rush into any stocks. We don't want to rush into any trades because, like I said, we always want the market to be in our favor, and right now it's not. And also, with that being said, a lot of previous leaders are starting to break down from their weekly 10 EMAs. So if we take a look, especially Tesla broke down. Sorry, I don't know why all these lines are here. Broke down of its 10 EMA for the first time in a long time, since April 2020. First time broke and closed below. Okay, besides this time, closed below 10 weekly on strong volume. and it actually retested the 21. So that is sign of caution, because when the leaders break down their 10 weeks on volume, could be signs of topping. It did hit the 900 exact and broke down. Could be signs of potential tops. ROKU as well, first time closing below its 10-week moving average since it broke out of its base here in September. And so that's sign of caution. Volume coming in as well. Other stocks such as NIO, another EV company, broke down heavily this past week below its 10-week. First time broke below its 10-week since the move upwards. Volume coming in. Also ENPH broke down below it, actually went under the 21 and closed below the 10-week on volume. So a lot of stocks are breaking down from their overall uptrend and going below the 10-week, which is literally the big signs of cautions for leaders. So with that being said, even like the FANG names are breaking down their 21-week moving averages, which is scary. 21 moving averages broke down, strong volume. See here, didn't break it since it hasn't broken its 21 weekly since the COVID crash. Amazon broke down its 21 weekly, hasn't done it since the COVID crash. So you always want to look at individual stocks, individual leaders, to see how they're doing compared to the market. Are they lagging? Are they leading? Are they consolidating? What are they specifically doing? That gives you more of an idea of what you want to do with these stocks, how you want to play them, and how you want to essentially trade them. So with these stocks breaking down, we want to find stocks that have resisted the decline for these past 2 weeks, have resisted the decline to their 50 days, to their 21 days. We want to see stocks going sideways. We want to see stocks making new highs, because these stocks are the ones that are going to rip higher as soon as the market provides us with a follow-through day or provides us with signs of turning back upwards and continuing its uptrend. So finding these stocks are not difficult. It's very easy to find, actually, because when stocks are when the overall market is correcting, or when the overall market's in a bear market, the easiest time to find strong stocks are during those times, because it's the only stocks that aren't going down, only stocks that are going sideways, only stocks that are making new highs. So it makes your job very easy. It's just up to you to do the homework. So I was taking a look at strong stocks, and I came up with about 6, 9, 7, 8, 9, 10, 11, 12, 13 stocks that are holding up relatively well. Obviously, there's more, but I also want to focus on stocks that have good fundamentals, as well as has growth for the next couple of years. All right, so the first stock we have is APPS, which is Digital Turbine. If you guys have been following me for a while, you guys probably know how much I love this stock. I was in since the earnings gap up, but this Tuesday, February 23rd, was definitely a very scary day. Huge shakeout in the first 30 minutes, and actually filled the gap, which was very scary to hold, as it happened in literally 30 minutes. I'm currently not in this position anymore. I did lock in some profit. Actually, the day after, I believe it's actually sold this on the 24th. Due to the overall volatility, I wasn't liking it. But taking a step back when the market is closed lets your emotions get away from things. Lets you get away from your emotions. That's certainly what happened to me. I was very emotional with this stock over the past week. But now taking a step back, I'm actually seeing how strong the relative strength on this is. Breaking out on good volume of this downtrend line here on Friday, as it announced, I believe, acquisition or some sort of news where they bought a company. So this is definitely on my watch for a continued move higher above this downtrend line. If the market can cooperate, if the market can show signs of a bounce, I do believe this apps will lead the charge to new highs. All right, so the next stock we have is CALX, CALX Inc. If we take a look here, it actually made new all-time highs on Friday on above average volume. It's resisted its overall decline. It's just had natural reactions to the stock, but overall it is not as liquid as I would like it to be. It's only like in the million shares, but the price action does speak for itself. It has been beautiful, especially the past 2 weeks while the market has been correcting. This has just been going sideways or continuing its move higher. So this is definitely one to watch moving forward. Maybe if you could go a little more sideways, make some sort of pattern where we could get in when the stock market gives us an opportunity to. Next stock we have is CELH, Celsius Holdings, another one that's been on my watch list for the past 3 weeks. It's still setting up here. It decided not to break down. It did have a huge shakeout. Now it's kind of doing like a double bottom type action here. And yeah, we're just looking for a breakout below this, above this downtrend line here. It's holding its 50-day moving average. Volume on the down days aren't as bad as other stocks are. It still looks good. It's showing signs of strength. It's showing that it doesn't want to break down. And I believe when the market does turn back up, this will break out. It actually did try to break out last Monday. Was that Monday? Yeah, Monday. It did try to break out, but failed due to the overall market on the Tuesday little flash crash that we had. So I do believe, like I said, once the market gives us the right opportunities, this will break out into new highs. Next stock we have is DKNG, DraftKings, another one that's been on my watch list for the past couple weeks. It announced earnings recently and had really great numbers. If we see here, it actually had a huge shakeout to 52. That's crazy. And this happened in a matter, I'm gonna see if I could actually show you guys on Tuesday. Yeah, right here. Opened at the 58 level, and by 9:45, so 15 minutes, dropped over $6 and recovered in the next 30 minutes. This is not normal action. This is very volatile. So which also gives me signs of caution. Like I said, taking a look at the VIX earlier, we don't want to be trading volatility. We want to be trading nice, tight, sound bases, nice, tight action, close, very tight price action, and then trade some breakouts, trade some slingshots, stuff like that. But if we take a look here, it has also resisted the decline, just essentially going sideways around the 10 and 20 moving average. So keep an eye on this above, like I said before in previous videos, above the 64 level, the 65 level, as once it breaks those levels, it's going to rip. And also the volume patterns have been amazing. Friday, strong volume when it broke out of this little base, strong volume. And the overall down days, very irrelevant volume. So one to definitely pay attention to. Another stock I'm watching for relative strength is Etsy. Also released earnings on Friday. And it was actually one stock that gapped up on earnings. During this earnings season, a lot of them have been killing earnings but gapping down. So the fact this gapped up is good to see. It also killed its earnings. You could take a look at it if you would like, but they had huge numbers, huge growth. And it actually held its 50-day. The relative strength on this isn't as strong as other stocks, but this is definitely one to watch, especially if it could continue going sideways or making new highs if the market decides to continue further its correction. So one to watch, Etsy for sure. And the next stock I'm watching is FTNT, Fortinet. This has showed tremendous relative strength the past 2 weeks, the past month actually. It's literally been going up, going sideways while the market has been declining, market has been declining on heavy volume. While FTNT has been showing signs of accumulation, showing signs of strong institutional support, bidding this stock up. So this is definitely one to watch, showing signs of really strong relative strength, especially above its 10-day EMA. If we take a look at the weekly, broke out of this sideways base, could be in for a bigger move moving forward. It was an inside week on this past week on very good volume. So this could definitely continue its move higher, and I would not be surprised to see this hit 200 if the market cooperates. So just please remember also that these are not, buy recommendations. These are just strictly for entertainment purposes. I'm not a financial advisor, and I'm not recommending any buy or sells. Just remember that. All right, so the next stock we have is HZNP, Horizon Therapeutics. Stock is a little bit, the chart's a little bit messy. I have a few gap downs, a few gap ups, but this is a stock in new high territory. Made new highs on Wednesday and had basically 2 inside days on Thursday and Friday. So I would definitely pay attention to this. Any stock making new highs in this type of environment is one to watch, especially if it has some fundamentals backing it up. So this is definitely one to watch if it can make another basing pattern or maybe like a flag to break out into new highs, if and only if the market cooperates. Once again, even if stocks are setting up for perfect breakouts, if the market is in a heavy downtrend, you don't want to buy right away, because even if a stock breaks out, it's going to have too much resistance to continue moving higher. So you want to wait until the market shows signs of a continued uptrend, shows signs that it's ready to continue moving higher, and then you want to buy those stocks showing relative strength. All right. So the next stock on my list is INMD, INMD Ltd. If we take a look here, it's just been going sideways, holding above that 21-day EMA. Essentially showing great signs of relative strength. A lot of stocks broke down below the 21 EMA, but this has bounced off it 3 times now. We actually closed a little bit above the 10 EMA, which is great to see. And we are basically just flagging here. These are great signs of relative strength. And if the market continues to correct, I would like to see this stock just go sideways, get tight, and then hopefully when the market turns back up again, this will break out into new highs. So INMD, one to definitely watch. You take a look at the volume patterns. Green days have been strong volume, and the red days have been lower volume. Great to see. One to definitely take a look for. It has shown signs of. It showed signs that it's proven already. Strong uptrend since the March lows, and the fact that it's going sideways right now in this type of market shows this move is not done. Could be setting up for another explosive move. All right, so the next stock we have is PLL, another stock showing signs of strong relative strength. 4 green candles in a row. Super strong volume the past couple of days. Broke out of this downtrend line on good volume. Down days have been lower volume. I'm actually not too super familiar with this stock as well as its fundamentals, so I actually have to do more research on this, which is also why none of the things I say are buy or sell recommendations. Please do your own due diligence, but the stock, just based off the price action alone, shows great accumulation, shows great signs of relative strength, and something to definitely look out for in the future. Because of how strong it's been acting the past few days. On Tuesday, it has a huge shakeout, going all the way down to the 40 level, hitting the 50-day moving average. Recovered back above the 50s and the 21 moving averages, and now back above the 10 on strong volume. So I don't know whoever was in this, that would definitely be hard to stomach. But it's looking to pay off as it hit all-time highs and close right above these highs, and looking to break out more in the next few weeks if the market cooperates. All right, so the next stock we have is Snapchat, another relative strength leader, as it is closed above its 10 EMA and bounced off its 21 EMA a couple times. Tuesday's action was wild, a huge bullish engulfing candle. If we take a look at the intraday, this was probably the most wild action I've ever seen in Snapchat. First 15 minutes went from 61 to 56, dropping $5. Recovered a bit, went back to the 60 level, went sideways, and then at 12:50 p.m., look at all the volume coming in. Huge amounts of volume, and went from $58 to $72.95. This is intraday, so this happened within a couple of hours, which is crazy. And the next couple of days, it just went sideways, dropped down a bit, recovered. That was overall because of the market. So pay attention to Snapchat for sure. This definitely showing signs that it wants to break out, wants to go crazy once the market allows it to, essentially. All right, so we have 2 more on our list. One is Twitter. Twitter has been literally going sideways for the past, ever since it existed. And then recently it's just been breaking out like crazy. A lot of good things are happening with Twitter, and Twitter is just a great platform. I love it. It's where I learn so much stuff about trading. It's where I get to meet and talk to great traders, and also just do most of my work. Take a look here the past couple of days, past couple of weeks, shown strong relative strength, gap up, held its gap up, and it's just holding above the 10 EMA. Superb volume coming in inside day on Friday, and it's basically near all-time highs. So Twitter is definitely one to watch moving forward. If we could get some more basing and just a standard breakout would be amazing once the market cooperates. And lastly, we have Wix, Wix.com, the website. It's just been superb relative strength with a huge move on the 19th on amazing volume. Broke out and it's just consolidating its gains here, going sideways. Didn't give back much. Did on Tuesday, but then recovered. And now we're just flagging near all-time highs. Superb volume patterns. And this Wix, and it was actually consolidating since July. Take a look here, broke out of this downtrend line here and continued higher. This was a smooth breakout. I didn't even notice this. Holy. But yeah, if we take a look, it's just digesting its gains nicely, not giving much up. So this definitely has room to continue moving forward. Like I said, as long as the market cooperates. So these are my stocks that I'm watching so far on my list of relative strength. Once again, overall, we have to be cautious here. We want to protect our capital. We also want to protect our mental capital. So don't stress. Don't try to catch bottoms. Let the market come to you. Wait until the market confirms back its uptrend to start getting aggressive. Let the volatility die down. And don't worry too much. You know, the market, it is always going to be here. The market's not going to go away. And if you don't trade for a couple days, couple weeks, couple months, you won't die. You know, like you'll be okay. There's a time to go fishing, as Jesse Livermore said back in his day. And right now is probably the best time to go fishing. Let the market just do what it has to do until it's time to get back in. And you'll know when it's time to get back in. When you see leaders setting up again, when you see breakouts working, when you see the market back above its 50, 21, 10 EMA, it's time to get back in. But right now, just let it be. Be patient. And with that being said, that is pretty much it for this video. If you did like what you saw, and if you didn't already, please hit that like button, subscribe, share with your friends and family. Hope you guys have a wonderful week. Take care, and thanks again for watching. Peace.